is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'm going to start off with the euro dollar. A key reversal up on Friday, as well as a decent close back up over the recent 50% Fibonacci line at 119 3/4 and the short medium moving average currently 119.64. I suppose the most important point was the third consecutive close over the upper time, currently at 119.21, the 2021 bearish Andrews pitchfork. Unless something significant happens in the next 24 hours, this pitchfork will be retired, along with target X2 in the 116.15 area. That's the full target for the March base bear flag. The market now is between the rising long moving average below, currently at 119.20, and the flatlining medium moving average above, currently at 120.57. However, what seems to be occupying the market's time was the 50% Fibonacci line and the short medium moving average. So far today, a seeming big follow-on to Friday's key reversal up and what looks like a rare compound key reversal pattern, and a move up towards the medium moving average overhead. Cable. A strong looking key reversal up on Friday, anchored on the rising medium moving average below, currently at 137.15, along with the nearby supremely important lower time, currently 136.85, of the June to September 2020 bullish shift pitchfork. This pitchfork has given the bullish angle of attack of this market since September last year. Now, admittedly, the top was capped by the short medium moving average, currently 138.52, but it did not look like a strong effort. So far today, a market edging higher, just over the short medium moving average, and a reasonable follow on to Friday's key reversal up. Euro sterling. A significant key reversal down on Friday, forming as it did at the height of the market from the March and April markets, and closing back below the old April 2020 low at 86.69. The move lower was interestingly halted by the declining short medium moving average, currently at 86.36, whilst the high was a close enough match to the late February high at 87.30. I'm now curious to see if this was a full extent of the follow-on to last week's weekly key reversal up. After all, we still are on for a monthly key reversal this month, with still a full 2 weeks of trading to look forward to. So far today, initial follow-on lower to Friday's key reversal down, but limited by the short medium moving average, causing a pullback up to a possible hammer action, or maybe dragonfly doji possibly, or even maybe an indecisive doji. Let's see. US dollar against the Indian rupee. A third bearish black crow on Friday, though not as dramatic as the previous 2 sessions. The fall was halted by the old 50% Fibonacci line of the February to April 2020 move at 74.26, which was interesting as this hardly played a role on the way up. Overhead, we still have target X4, full target for the February to March double bottom, and the last of a series of targets on the way up, though I am unsure if this will now be realized. However, I will leave it on for the moment. So far today, a slightly higher open and a further pullback up, though tempered at the 75 even level. US dollar against the Brazilian real. A key reversal down on Friday, but there is more than what can be seen on face value here. Yes, it is a key reversal down, but the fall was halted by the combination of what looks like a very important rising short medium moving average, currently at 556.44, and the lower time, currently 556.49, of the recent January to March bullish shift pitchfork. First, let's look at that short medium moving average. This is the 4th time in the last 5 weeks that the market has been halted and supported by this moving average. next to lower time. In conjunction with the early March downtrend, currently at 573.56, they form a sideways triangle with the requisite number of touches already on the books. I can't as yet give a potential target above and below. We haven't properly broken either the lower time nor the downtrend. However, I can give an idea of the size for both an initial topside break and an initial downside break. Topside would be about 2,500 ticks, whilst downside would be about 1,550 ticks. A full move, which does happen but is rarer, is about 4,300 ticks all told, in the direction of the break, above or below. However, a couple of points to remember. 6 out of 10 times the break is on the top side. Additionally, being so far along the triangle, we have a high degree of false breaks and pullbacks as well, something like 60 to 70% of the time, so watch carefully. US dollar against the Mexican peso. A lower yet indecisive spinning top on Friday. It was still a third bearish black crow and a continuation of the idea I raised 2 weeks ago, and I quote, "Recent action also leaves the way open for a possible descending wedge, descending triangle, or even a double bottom pattern," end of quote. These ideas are now coming to fruition. We've already achieved the descending wedge pattern target. What we have now is a possibility of two types of head and shoulder tops. One from mid-January to late March, and another from late February to early April. In the first case, we have an initial target X3 in the 1971.70 area, with a full target X4 down in the 19 even area. In the second case, we have an initial target X1 in the 19.5 area, with a full target X2 down in the 18.85.50 area. This only leaves the idea of a possible double bottom, and that will depend on target X2 if it holds. All these also depend on the market not breaking the early March to date downtrend, currently at 20.0405. So far today, further continuation lower, approaching target X3. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.